Good morning, guys. What's going on? It's your favorite mortgage lender, Abdel Kawami with the Mortgage Plugs. I wanted to sit down with you guys today and talk to you guys now that today is May 17th of 2021, which means what? It's tax day, okay? I'm going to talk to you guys in regards to obtaining a mortgage and when you're filing taxes, the things to keep in mind. Most importantly, you should always consult with a certified public accountant and allow them the opportunity to understand what are some of the things that you must keep in mind. So we'll start off first if you are a W-2 employee. If you are a W-2 employee, generally you simply need to bring your W-2s along with any additional paperwork that you have provided from your employer, such as bonuses, car exemptions, and so on and so forth. When you're obtaining a mortgage as a W-2 employee, generally we need 2 years of your tax returns, including your W-2s, in order to accurately calculate your income. There's normally a very limited ability for standard deductions because you generally pay your taxes immediately per paycheck. Now, as a self-employed borrower, probably one of the biggest hurdles for a good majority of consumers when they're self-employed is their taxes. So when you are self-employed as a mortgage lender, we need to take a look at what your net income is, and then we add back certain things such as mileage and so on and so forth. As a self-employed borrower, when you're obtaining a mortgage, in addition, Fannie Mae requires us to take a look at 2 years of history. Now, if you go from being a W-2 employee to opening up your own business, as most of us did after COVID, you must have 2 years of that 1099 income of being self-employed. Okay, that is very, very imperative for somebody to understand. And then when you have your own home, you file something called a Schedule E, which is basically how much money you receive from your rental property. It is not based off of the lease agreements that you have with your tenants. It's based off of what you file on your taxes. Therefore, if you are currently renting, you must provide your accountant, however they run their business, generally with the lease agreement, and then also with itemizations such as repairs, expenses, mortgage statement, insurance, and so on and so forth. When you're qualifying for a mortgage and you own a property, again, it's not based off of the rentals that you receive per your lease agreement. It's based off of your Schedule E taxes. We will take your net income and add back certain things such as your mortgage interest, your insurance, your depreciation, and one-time repairs. Very important when you are looking to obtain a home that you consult with an attorney and a mortgage professional so you understand what's the most compliant, legal, and efficient way to put you in a position to qualify for a mortgage without hindering yourself based on what you file on your taxes. Thanks again, guys, for tuning in. Once again, this is based on an informational perspective. Please contact your accountant or your certified public accountant for them to assist you. Thanks, guys, and I'll catch you guys next time.